Guy, I went to the market yesterday. I almost greeted tomatoes. Good afternoon, ma. Because how did we get here? Guy, I went to the market yesterday. I almost greeted tomatoes. Good afternoon, ma. Because how did we get here? Something I used to buy for 5k is now doing premium membership. Even transportation does like a first class flight. Like it's not even funny any longer. But we just have to laugh it out in order not to cry. Wait, let me ask you something. If everything around you is increasing, why is your bank account doing like as if it's on vacation? Despite the fact that everybody is complaining that things are increasing, some people are quietly making money low-key. Why? Dividend. Yes, real money landing into their account. Congratulations, your investment just paid you. No stress, no shouting, just vibe. And yes, there are some of you that keeps refreshing your account like as if miracle is gonna happen. Listen, there's difference between money working for you and having money work for you. At Lead Capital, we help you stop chasing money, but putting your money to work. Because if your money is not growing, it's doing hide and seek with your future. So instead of complaining every day, why not position yourself to benefit? Invest smart, earn slowly, and finally, let your money stop embarrassing you. Start today. Visit us at www.leadcapitalgroup.ng to get started. Toodles. The biggest mistake new investors are making right now on the Nigerian stock market is chasing a particular stock after it had already moved or increased to a particular point. You see a stock trending, for example, GTCO, Accessco, Dangote Cement, Lafarge Wapco, because they're like the top winners from the last week report. You decided to buy because everyone is talking about it. Not because you understand the business, but because you don't want to miss out. And what happened next? A small pullback and panic setting. You sell. Or worse, you hold without conviction. Smart investors are not reacting to the headlines. They are studying fundamental companies, entering before the crowd, and holding with a clear plans. Because on the Nigerian stock market, timing without strategy is gambling. So before your next trade, ask yourself, am I investing based on value or just noise? Because in the Nigerian stock market, disciplines will always outperform emotion. Visit us on www.leadcapitalgroupng.com or download the Lead Trader app on your App Store or your Play Store to get started. Toodles. Guy, I went to the market yesterday. I almost greeted tomatoes. Good afternoon, ma. Because how did we get here? Something I used to buy for 5k is now doing premium membership. Even transportation does like a first class flight. Like it's not even funny any longer. But we just have to laugh it out in order not to cry. Wait, let me ask you something. If everything around you is increasing, why is your bank account doing like as if it's on vacation? Despite the fact that everybody is complaining that things are increasing, some people are quietly making money low-key. Why? Dividend. Yes, real money landing into their account. Congratulations, your investment just paid you. No stress, no shouting, just vibe. And yes, there are some of you that keeps refreshing your account like as if miracle is gonna happen. Listen, there's difference between money working for you and having money work for you. At Lead Capital, we help you stop chasing money, but putting your money to work. Because if your money is not growing, it's doing hide and seek with your future. So instead of complaining every day, why not position yourself to benefit? Invest smart, earn slowly, and finally, let your money stop embarrassing you. Start today. Visit us at www.leadcapitalgroup.ng to get started. Toodles.
Good morning, IFM investors. It's always a pleasure to have you join us on this call. I am Linda A. Ewudagi, and I'll be taking us through the equities market report. So our session outline still remains same. We'll be reviewing the equities market. We'll be showing you snapshots of the audited and unaudited earnings for the year 2025, investors' delight stock for the week, weekly stock recommendation, dividend qualification window and payment tracker, weekly expectation, and outlook. So last week, we saw an initial pullback on Friday to Monday as the week commenced with a slight profit-taking dip. Monday saw both indices hit their weekly lows, which is a typical market behavior as investors often liquidate position following the prior week's gain. Tuesday to Wednesday, the market staged a definitive recovery starting on Tuesday. The steepness of the curve between Tuesday and Wednesday suggests a surge in buying pressure, likely driven by positive corporate earnings releases, institutional reinvestments and participation, as well as favorable policy signals or macroeconomic indicators. On Thursday, the week concluded a high note with the NGX 30 crossing the psychological barrier of 250,000 points. The parallel movements of both indices indicate that the rally was broad-based, though the NGX 30 slightly steeper. Incline suggests that the blue chip stocks were the primary drivers of the week's appreciation. The month of April was characterized by significant growth. Starting the month near the 200,000 mark, the All-Share Index climbed steadily to close at 242,277.81, reflecting a gain of over 20% within the month yet to date. The broader yearly trend remains aggressively bullish. Since January 2026, the index has risen from approximately 150,000 to the current level of 242,277.81, indicating a highly productive period for equities. This represents a significant month-to-end gain of around 20%, indicating robust market participation and positive sentiment. Price action shows a consistent pattern of higher highs and higher lows, confirming a well-established uptrend. Relatively flat to mild bullish movement suggesting accumulation, and we saw a low volatility, which indicates investors were positioning ahead of stronger catalysts. So mid-April, that's around 13th to April 22nd, we saw a breakout phase with increased momentum. The appearance of multiple P makers, likely institutional or signal points, suggests heightened buying interest or portfolio rebalancing. We saw market transition from consolidation to expansion, while late April, around 23rd to 30th, we saw the acceleration phase with sharp upward movements. Strong bullish candles indicate aggressive buying pressure, possible FOMO, which means fearing of missing out. The index breaks past 230,000 resistance, turning into support. Looking at the chart analysis for the All-Share Index year to date, the NGX market has maintained a strong upward trajectory in 2026, driven by sustained positive momentum and investors' confidence. Notably, April marked a decisive breakout phase, with the All-Share Index reaching new record highs. Trading activity during the week was highly concentrated in the financial service sector, which accounted for a dominant 77% of the total volume traded, this underscores continued strong investors' participation and liquidity within the banking and the financial sector. The other category followed with 15%, indicating moderate activity across smaller or less classified sectors. Meanwhile, both the consumer goods and the service sector recorded relatively low participation at 4% each, reflecting subdued trading interest compared to the financial service sector. Despite a shortened 4-day trading week due to the Workers' Day holiday, the market showed robust bullish momentum. The All-Share Index saw a significant jump, reflecting a highly positive sentiment, current closing at 242,277.81 weekly change. We saw a weekly change of 7.33% year to date, return 55.69, and the market capitalization closed at 150.99 trillion. Trading volume and value activity level increased compared to the previous week. Total volume stood at 4.84 billion shares, which is up from 3.81 billion. Total value at 287.76 billion, up from 213.965 billion. The top three equities that led the chart was Access Holdings, UBA, and Wema Bank. They dominated the week, accounting for 41.85% of the total volume traded. Sectorial performance under the Leaf Capital coverage was mixed across different industry, though major gains in industrial and oil sector drove the overall index up. Financial service sector remained the most active sector, contributing 77.56% of the total equity volume, and consumer and service sector ranked second and third, respectively, in terms of the turnover volume. So looking at the snapshot of the audited and unaudited earnings for the year 2025, the 2025 earnings season was defined by a resurgence in the industrial sector and a recovery in the consumer goods space, likely due to the stabilized margin. However, the banking sector faced a correction or a significant headwinds, as evidenced by the shape profits contraction in major tier one institutions like FBN and UBA. Looking at our investors' stock for the week, we have the GTB, the Nigeria Breweries, MTN, Zenith, Presco PLC, and Dangote Sugar. So looking at our weekly stock recommendation snapshot, where we have the buy, the hold, and the sell. So we have the NASCON, the MTN, the Dangote Cement, Zenith, Cornerstone, Better Glass, among others, under the buy recommendation. While for our hold recommendation, we have FitSing, Custodian, First Bank, NACO, Okomu, ICO, among others, representing the hold for the week. While for our sell recommendation, we have Lasaco, we have Dangote Sugar, we have Transcorp Hotel, Geregu, and Horn Oil. This is just an extraction from the original stock recommendation list that has been sent out. For the purpose of this presentation, we had to, select some of this stock just for the presentation purpose. So looking at our stock recommendation for the week, 4th May, the current market window presents a rare convergence of undervalued entry points and high yield dividends, with Nigeria exchange showing strong bullish momentum. Waiting could mean missing out on significant double-digit return. So exceptional growth potential, multiple blue chip and high growth stocks are currently trading at a significant discount to their target prices, where the top opportunities for immediate capital appreciation include the likes of Transcorp. We have over 37.03% upside potential. Access Bank with over 31.85% upside potential. FCMB 30.94% upside potential. Fidelity and Corn Oil both offering 28% projected gains. So you want to lock in for free cash flow. Several recommended buy stock has significant dividend payments pending. By positioning now, you secure your right to cash distribution from heavyweights like Dangote Cement, which declared 45 Naira dividend per share. Presco declared 42 Naira dividend per share. GTCO 12.67 dividends per share. Zenith 10 Naira respectively. So looking at the strategic market timing with a year-to-date market return exceedingly 55% already. The momentum is firmly with the bulls. Buying now allows you to enter before these stocks hit their 52 weeks high and projected targets, e.g. the MTN heading towards a target price of over 1,000 Naira, Dangote Cement heading towards a target price of 1,070 Naira. Investing in any of the ticker means that your portfolio stands to gain an average of 15 to 30% in capital appreciation alone across this selection. Act now to lock in the prices before the next market rally. So still viewing our dividend payment tracker. For Boa Foods, they declared a dividend of 28 Naira with qualification date 4th of June and payment due date 15th July. So what this means is if you buy into any of these tickers on or before their qualification date, you qualify to earn the declared dividends. So after this session, we'll be sharing or we'll be sending out these presentation slides so we can take advantage of the price available for these tickers and take position. So looking at our weekly market expectation for the week. So last week, the Nigeria stock market ended in the positive territory, fifth consecutive week, making it. The bullish sentiment was as a result of investors' contentment with corporate performance as reflected in the Q1 corporate results, most of which was announced last week. As the earnings season winds down, we expect the market to be dominated by investors taking profits on tickers that severally surpassed their 52 weeks high mark over the past few weeks. This may likely mute buying interest for the week, with the market closing on a slightly bullish note. We also predict that the NGX All Share Index will be above the all-time high of 242,277.8 points to close above the 245 basis point levels. We encourage all lead investors to download our general stock recommendation and Money Insight for weekly investors decision. So by and large, the bull to display in few of the trading days, leading to a slight positive market closure. With this, we've come to the end of the equities report. I'll leave you in the hands of Mr. Samuel Oladipo for the fixed income market report.
Okay, thank you so much, Cynthia, for the robust overview of the market. And quickly, we'll take a look at the fixed income market. And because of our time, we'll make it very snappy. But taking a clue from where Linda stopped, if you paid attention to the weekly recommendation, I think our projection is that the bullish sentiments we've witnessed in the past couple of weeks might slow down in the coming weeks. And that will be on the back of the fact that most results have already hit the market, which has been the major catalyst for the bullish sentiment. And as such, we strongly believe that at this point in time, what any rational investor should be doing would be consolidating on their profits and trying to lock in those profits elsewhere. And that is where the fixed income market comes in. As the financial market is, as we all know, rather, the financial market is a very robust market, which gives opportunities to various arrays of investors. So this morning, our focus will likely be on product offerings, likely be on where we believe investors should be deploying the realized capital gains so as not to watch those gains go down the drain. But before we look at our various product offerings, we'll just quickly take a look at what we witnessed at the fixed income space. For last week, we saw that liquidity determined most of the activities in the markets. Last week, we had well over 2 trillion naira inflow from OMO maturities that hit the system. And as such, we saw that influencing mainly activities at the primary market, so at the secondary market of the treasury bills. And because of that, we saw that the funding rate also held stable. Funding rate held stable on the overnight window, and also on the open repo rate window, and also on the overnight rate window, we saw funding rate holding stable rather at 22.2%. And for the treasury bills secondary market, we saw that the market closed on a bullish sentiment, and that was largely due to improved demand we witnessed at the mid trading session, particularly after the FGN bond auction results came out. We saw that largely pushing yields downward to close the week at 17.53%. That's a 10% week on week, 10 basis points week on week decline from the previous week. Also, just quickly looking at the last primary market auction for the Nigerian treasury bills, we saw that rates held constant week on week from at 15.95, 16.19, and 199% respectively for the 91, 182, and 364 debut. For the auction holding this week, we expect similar sentiments to play out on the back of the fact that we have robust liquidity in the system. We do not see rates going higher than the levels they are, and that's to tell us that the monetary authorities have given investors decent opportunity to take advantage of the happenings in the market. And therefore, all investors who are looking to deploy their realized gain into the fixed income market, we strongly believe now is still the best time to take advantage of the current rate levels, as we expect that the rates we have right now is likely going to decline going into the future. And for the bond secondary market, last week we saw the activities in the market largely dictated by the primary market auction results, where around 300 billion was offered. But at the auction, we saw that rates went up slightly by an average of 15 basis points, which also impacted activities at the secondary market. Overall, at the end of the week, we saw that the market closed bearish, with average yields advancing slightly by 1 basis point to close at 15.91%. Our expectation is that with inflation ticking up, we would see a slight uptick in the various rates various yields rather across the various markets. But we can see that the market still held constant, held strong, as we would have naturally expected that average yields would have gone up higher than the 1 basis point we saw last week. And that is to tell us that for investors who are looking to possibly wait and see what direction yields might go, probably yields will go up. I think the signals are clear. The monetary authorities are not looking at increasing borrowing rates or borrowing costs any moment from now, which tells us that for all investors who have been waiting patiently for deploying their capital into the fixed income space, we believe now is the best time for you to do that. As like I emphasized earlier, we might not have the rates we currently have at the moment for long. Also, at the foreign exchange market, last week we saw a slight turnaround in the rates across both the official market and the BDC and the parallel market. As on the official window, we saw a 121 basis point decline in our official rates, and on the parallel market we saw a 72 basis point decline at that level to close at 1,374 naira 95 kobo and 1,400 naira respectively. But looking at our various expectation rather for the week, we also expect that the sentiment we saw that played out last week with influence activities this week, as we believe the activities across both the Treasury bill secondary market and the FGN bond secondary market will be largely dictated by liquidity levels in the system. But like I emphasized at the beginning of this presentation, that our focus this morning will be on various opportunities for clients to deploy their realized capital gains. And that's where our various product offerings come to play. In Elite Capital Group, we have different areas of products that have been targeted, that have been carefully designed to meet the objective of different areas of investors, from our retail investor to institutional investors to high net worth investors. We believe that these products they would afford you the opportunity to also leverage on the dividends and the returns that are available in the fixed income market. As my colleague rightly mentioned, the stock market has returned 55% year to date. We know for sure that the market would at some point slow down, and we don't want to get caught in that. We are not saying you should sell off your entire position. Of course, we would not advise you to do that. And that's our various analysts in-house are there to guide you. On your positions or your portfolios where you've seen significant gains, you've seen 100% return, I think it's only rational for you to consider taking out those profits and investing it elsewhere. From our lead fixed income fund to our lead balanced fund, our lead dollar fund, these are mutual funds that we believe that if you invest in them, one, you enjoy capital appreciation, two, you enjoy safety of your fund, you also enjoy periodic dividend payouts. And the good thing is that the risk profile across these various products are significantly low, which means your fear of possibly losing your capital or losing your funds has been reduced to its barest minimum. And then for our institutional clients who are also looking at where they position, because in recent times we've seen clients say that we think that the mutual fund is mainly for retail investors. We need products that would catch our attention. And I've always told them that our Lead Capital, we have all areas of products. For our lead Gazelle portfolio, this is like a fixed income product where you get to lock in your funds for stable tenor, which runs from the 90 days to the 365-day tenor. And one thing we are always confident about is the rates that this particular product would offer you it is very competitive, and when you compare that, when you benchmark it against where you would not, what you would get across the market or even with the banks, you would realize that you are better off in this very product. And then for clients who have significant FX and are looking to also invest in the market, we are able to also afford you the opportunity to buy Eurobonds across the entire sub-Saharan African region and even far away into the Middle East or possibly into the advanced countries. All these products are there for you to take advantage of. And our emphasis this morning again would be that it will be very, very unfortunate if we sit back, do nothing about our portfolio, and then we watch all the gains we've amassed since the beginning of the year go down the drain. So it's a call on all investors this morning. Speak with our various analysts, various relationship managers. We'll be here to guide you. We'll be here to direct you on how to effectively rebalance your portfolio. And we are very confident that if you listen to our guidance, if you listen to our advice and you follow our guidance, you will be better off in terms of investing. And with this, we've come to the end of our presentation for this morning. We would now be taking questions. If you have questions, you may use the chat box to type out a question, or you may signify by a raise of hand, and we would unmute your mic. We have some questions already. What does the sectorial distribution imply for investors?
Okay, thank you for your question. It suggests that the market liquidity and opportunities are concentrated or highly concentrated around the financial service sector, making it the key sector to watch for short-term trading and positioning. Just like we rightly mentioned during the distribution table, where the financial service sector led the chart with over 77%. So yes, the market liquidity is highly concentrated in that region, and it's a good place to, take position and see how best you can utilize the opportunities around that space. So the next question: what significant market movements occurred in April? Okay, so in April, like I rightly mentioned, April marked a breakout phase for the NGX, with the index reaching a new record highs, driven by the increased buying pressure in the market. And this was largely driven or characterized by the earnings releases that we saw for both Q4 2025 as well as Q1. Some of the results are already hitting the public domain, Q1 2026. So yes. The next question: I'm yet to get my TIP shares in my CSCS. It's been over 4 months. Okay, thank you for your question. So the allotment is yet to happen. So I believe once the allotment hits your CSCS position, your account will be reconciled in-house. So we're following up with the registrar. Once that happens, in terms of the allotments, same will be reconciled in your position in-house. Is the application available? Yes, the lead trader application, both the iOS version and the Android version, is available for download from the Play Store and the iOS store, respectively. Mr. Bankole, you said, I want to believe that this is one of Lead Capital's interests to help their clients to make profits in the capital market. I've been trying for the past 3 weeks to sell my Royalex stock. The order gets cancelled without any explanation every time I place a sell order on the Lead Trader app. I have watched helplessly and all of that. Okay, thank you, Mr. Bankole. This is what we will do. After the call, we'll get an officer reach out to you. Your account is possibly not on DMA. Maybe that's why you're facing these challenges. However, after this call, we will reach out to you and better understand what must have transpired and provide a solution for you. Thank you very much. What is your take on Access Bank? They are likely not going to pay dividends. So for Access Bank, we do not have any information on that. We will let the house know, or we'll bring it to the public domain once we get one at our disposal in terms of their dividend payout, whether or not they're paying dividends or not.
I think in addition to that, thank you, Linda. If you look at the UBO audited account, it was clearly stated that they're going to pay dividend. We haven't seen such from the Access Bank. So they've not chosen date for their AGM. So once we get further communications from the corporate unit of the Access Bank, we are going to communicate with the House, but no further communication as to whether they are going to pay dividends or not. And we shouldn't second guess, because different banks, they have a different board, and then the board will decide with CBN approval whether they are going to pay or not going to pay. But we also like to caution all our customers. We don't want to do panic selling, please. Don't let that happen. So most of the stock we have actually put forward, they are based on valuation. If they are not paying dividends now, there's tendency for the stock to also rally again, because people are also looking for a lower entry price. They will start taking position. If they have sold and they're at a loss, it won't be to your own advantage. Please don't do panic selling. Thank you.
Okay, thank you. Next question, can we have a look at the relative PE ratio of tickers to enable us decide which one are not overpriced yet?
Yes, if you check our weekly recommendation, the one we used to send out before this presentation, that covers over 72 stocks, we have actually positioned some key metrics for your guidance. You see the earnings per share, dividend yields, the PE ratio, and then price to book ratio, and the return on asset and return on equity. These are the key metrics. And as soon as we receive any of these corporate results, either Q1 or Q2, we try as much as possible to work around those key metrics. So if you have not been getting our weekly stock recommendation that covers 71, please you can indicate. But we usually send it out, and then they itemize all these key metrics. You see it here, which is what we're also using to put all these recommendations forward. You see buy, hold, and then sell. Thank you.
Okay, next question. Because of our time, we're just going to take two more questions. So concerning the upcoming Dangote Refinery IPO, do you have an investment product I can start building up my funds to participate in the IPO?
Okay, thank you very much for the question. As I mentioned earlier, at Lead Capital Group, we have various product offerings that match different investors' objectives. And for you as an investor, you're looking at somewhere you can start to build up your funds ahead of the upcoming public offer. We believe that mutual funds serve this objective best across our lead fixed income fund, our lead balance fund. Any of the two products would best serve the objective you're looking at. And you can just reach out to us. We don't have your name. We would have said we would contact you, but we don't have your name. Kindly reach out to us and we'll guide you on how to go about investing. And for the benefit of every other person in-house, for the Dangote Refinery, we advise that you start to set aside some funds for this purpose, and our mutual funds would help you to start to gradually accumulate your money while they also earn returns for you, rather than just leaving it in your bank account where it earns almost no interest. Because of our time, we still have so many other questions, but because of our time, we can't take more than what we've taken. We would like to thank you very much for always taking out the time to join us. We do not take your time for granted, and we strongly believe that we are here because you are there. We wish you a very productive week ahead, and do have a great day. Thank you.